Well, the inflation numbers are in, and yeah, it wasn't so good. Welcome to the Riz International Weekly Market Recap, and we'll start here as we always do, looking at the S&P 500. And before we get started, I'd like to just give a simple request. If you are watching this and you do enjoy these recaps, make sure you click that like and subscribe button down below. It really helps the channel grow as we continue to try and reach more and more traders to help them learn how to act and trade in the market. And right now, things are a little tricky. The CPI data came out on Friday. It was higher than expected, and the market reacted in kind. Thursday was a pretty big signaling day with the expectations that CPI numbers were going to be higher, and well, the Fed did not disappoint. The most recent inflation print was worse and higher than we expected. Let me pull the number up here. It was, where is it? 8.6%. Lots of questions around that number, but yes, 8.6% is what is being, reported for the current CPI numbers. The Consumer Price Index is what we use to kind of gauge inflation at this point. And I understand that things are considerably more expensive than that. If we look at things like gas, food, in real estate, things like that, all of that is considerably higher than 8% what it was at the beginning of the year. I can promise you that much. And traders and investors reacted to that, and it was definitely negative. We had already gapped down in the morning with the anticipation of that, let's just say, less than positive report, and we weren't disappointed. So, we are sitting right on the 3,900 level right now, and this has been a critical support area for quite some time. We've had multiple attempts at 3,900, and we have not been able to breach. I'm counting 1, 2, 3, 4 attempts, and we can include 5 on Friday as we're sitting right there, right on that level. But I'm going to be honest with you, I think this is the time it's going to go. Now, I could be wrong on that. The market will tell us on Monday whether I'm right or not, but I suspect that we are going to see more downside in the market here in the coming weeks, and probably next week, to be honest with you. And 3,800 is the next level that we are going to be keeping an eye on for the S&P 500 as the critical support area. If we breach below that, well, there's going to be a lot more downside than what we've already had. I'll just put it that way. This isn't like the floor per se, but it's definitely a big area for the S&P 500. We're going to be watching that very, very closely. The beginning of the week was mostly just consolidation, no real solid direction, just up, down, up, and then down we went on Thursday and Friday. And this has made, obviously, trading incredibly difficult in this environment. It does lend itself to more shorts, which, of course, you need margin for your account. I understand that not everybody can short a stock. I also understand that, some people don't like shorting because of this mythological concept of, potentially infinite losses. And I'll just say, if you let a short go to infinite losses, well, that's because you didn't close out when you were supposed to. It's one of those things that, now, if you're unfamiliar with the process of shorting, of course, everyone knows the axiom, buy low, sell high. Shorting is just the opposite. We sell shares that we borrow from brokerage first, and you want to sell them high, and then to close a short, you buy the shares back at a lower price. So it's the same concept, it's just in reverse. But obviously, an environment like this will lend itself to more short plays, or if you like options, if you put options, things like that. I'm not advising you, of course, to take everything short, to, buy puts on everything. I'm just kind of letting you know what we're looking at going forward here as far as the types of trades that we'll be keeping an eye on. And I can still promise you there will be long plays that we'll have. There will be, call options, things like that as we move forward. But I'm just saying this type of environment is more conducive to those types of trades. Taking a look at the breakdown of the S&P 500 here, energy is just going freaking nuts. And I think we can all agree that this year has been horrendous for energy prices, to say the least. The energy sector is currently up 55% on the year. That is in-freaking-sane. Everything else is in the tank, but energy is through the roof. Utilities is sitting right on the zero line, basically. I mean, technically plus 0.66%. Everything else is below the zero line. Healthcare 10% down, financial 17, the S&P 500 itself 18 by the SPY ETF. Real estate down 20, though I have not seen a 20% reduction in the cost of real estate in my area. But again, and tech leading the way towards the downside at negative 25%. I think that we will see continued downside here, especially with everything going on as far as the economy is concerned. If I'm not mistaken, we are expecting another 50 basis point rate hike next week from the Fed. And so I think even though probably people have priced that in already, I think there's still more downside next week, and that's kind of where we're at. Oil continues to go. Remember, guys, back in the day when I told you I was bullish on oil, like back in this area? Yeah, would have been a good play. Not going to lie, if I had the capital, I would have taken it myself. But oil continues to run, closing on Friday right above this critical support area and resistance area of 120. And you can see how we sold off down below it and then bought back up. So that support area around 120 seems to be incredibly important. Looks like we closed at 120.67 per barrel on light crude oil, and oil has just been slowly creeping up. And even though we had this huge red day in the market on Friday, oil continued to basically hold. It did sell off, it got bought back up, and really held above that 120 line. As you can see, we're in a defined uptrend here on oil right now, and I don't see that changing anytime soon. Now, of course, President Biden is going to go talk to the Saudis, and if I'm not mistaken, the Venezuelans, and ask them to start pumping more oil. Their response will, of course, affect the direction that oil continues to go. And I will say that if oil continues to remain this high, very bad things will happen, because the United States economy is not based on oil being over $100 per barrel. It cannot be sustained this high, and if oil continues to go, there will be negative consequences for the economy. Now, I'm not going to use the C word or the one that CR plus ash. We're not going to say that here, because that's a buzzword that everybody likes to throw around. But I will just say, if oil remains over $100 per barrel, it's incredibly bad for the economy. And I think we're starting to see that. We're seeing that not only in gas prices, but diesel prices. I've heard there are, shortages of diesel in certain parts of the continental United States and North America at this point, and it just can't be sustained this high. We will see how high it will go and how high it will stay. I know that JP Morgan was calling for ridiculous numbers for oil by the end of the year. We'll have to see, but I'll say that I don't know if those numbers are truly sustainable. Gold continues to be unimpressive here, though had quite a positive day on Friday. Of course, people leaving the market typically flock to safe haven assets like gold, which is why in the past it had been considered a hedge against inflation, but hadn't really proven that this year. With inflation going up, gold has just remained in its lovely channel that it has been always. Did kind of bounce off the 200 simple moving average here, but nothing really too exciting to talk about, sitting right around at 1870 per ounce. Bitcoin taking a bit of a beating this week after basically hugging the 30,000 area and just refusing to get off it. 30,000 seems to be the area that Bitcoin wants to trade at right now. And even though we're seeing minor fluctuations to the up and the downside, mostly just kind of sitting around 30 and hugging it there, the rest of crypto is not doing a whole lot too exciting either. Of course, there are different things, but you'll note that coin volume seems to be coming down a bit. Of course, after we had this huge sell-off here, we had quite an uptick in volume, but we kind of see volume here over the last couple of days, last 20 days, really kind of starting to come on the downside. So we'll have to see how that goes. RSI sitting right around 40. And we did take one trade this week, and this is a name you should all be familiar with. Amazon had a 1-to-20 split, if I'm not mistaken. Yep, 20-to-1. I'm sorry, I got that backward. 20-to-1 split. So, of course, Amazon had been trading in the 2000s, right? And for the average investor like myself, taking a share of a $2,000 stock would, one, over-concentrate my positions in my portfolio because, well, I could afford probably about one share, let's be honest. So it behooves Amazon to get, more investors and more people being able to actively trade the stock to kind of help encourage people to get in on that. Now, that means that, of course, that if you held one share of Amazon pre-split, you now hold 20. Congratulations. And so on and so forth. So basically, whatever share number you had, multiply it by 20. Now, let's see here. What was our price that we got in on this on? Got in on split day, if I'm not mistaken, in on the 6th. Right on split day at 125.85. Of course, Amazon has been taking an absolute beating with this rollover in the market that we've seen, and not overly surprising. But if you're not in Amazon yet, $100 per share or even 109. Absolutely spectacular, an amazing price to get in on a company like this that is looking to muscle out people from the digital space. They're going to have a hard time unseating Walmart from physical locations, but as far as the digital space, Amazon is king of the hill. And I think even if we do see some downtrend here, Amazon's not going anywhere, and saw a huge expansion during well, let's just say the big problem in 2020. And I think that will continue. I can say from my own personal experience, the Amazon warehouses are just getting more and more frequent in my neck of the woods. I feel like they're putting up a new distribution center every week around here. So great company to invest in long term if you can hold it and not worry so much about the downside. And 109 is an absolutely phenomenal place to get in. Looks like earnings aren't coming up here again until July, so you've got plenty of time to let that summer buying get in. Another position that I wanted to talk about, there we go, that we are in on, and this is a very tricky one, is we're in short on USO. And I know that Riz alerted that he added to this position on Friday, if I'm not mistaken. Let me double check that so I'm not misquoting him. Maybe it was Thursday. Yes, it was Thursday. It was the 9th. So got in, added a little bit more short on this. And this is one of those things that, because I asked him about it, because I'm like, bro, what's your thesis on this? Especially with, JP Morgan and some of the other big banks saying, oil's going to go to, the moon. You kind of got to wonder when they use verbiage like that. And asking about the short, and it basically came down to the 120 level here on oil being a critical support and resistance level. And Riz is of the opinion that, again, I talked about this earlier, oil can't sustain at this price. It has to come back down, and that would obviously benefit our short position here on USO. Be very, very careful with this. If you are in short on USO and you followed our alert on this, all I'm going to say is be incredibly careful with this, especially in this environment. With energy up over 50% on the year, this is a very risky short. Risky, with risk comes great potential reward, but also the potential for losses as well. So all I'm going to advise, be very, very careful on this one. We want to see some downside here in the next couple days. Otherwise, in my opinion, if it were me and my money, and that's all I'm doing, I'm not advising you on what to do with your position, I would let it go. That's just me and my 2 cents on oil. I feel that in my mind, there's more upside to oil, but I will say this, Riz is a much more seasoned oil trader than I am, and I will always defer to his judgment on that. But for this one, I would be very, very careful if you were holding this one short. I do want to go ahead and open it up to questions. We got quite a good group of people here. I love this. Thank you to all our elite members who are here live on the call. Please go ahead and post up in the chat any questions you might have. I would love to, kind of converse with you and see kind of what you're looking at, any questions about what's going on with the economy, different tickers, things like that. More than happy to talk about whatever works best for you guys. But it's a very, very interesting time that we are in right now, especially with the markets in general. Of course, there's a lot going on around the world. There are a lot of external factors that are, working against the market at this point. Of course, the price of oil is going to be one of them. It's going to make things incredibly difficult for supply chain issues. Costs are going up, and that will mean that those costs get passed on to the consumer, which is always fun. But that being said, there are opportunities to be had. If you were an elite member, you were given Riz's buy locations, and I'm not going to share those here on the general discussion because that is special for our elite members. And of course, the dip buy list. Riz did advise taking some profits up in this 4,100 area, and I hope that you were able to do that if you got in on any of those trades, because you definitely made some cash on that. And be ready to deploy some more cash here. I would say right now the best thing you can do is kind of build up your cash position. If you do have positions in the green, I would recommend considering taking those off and let just to be careful. Okay, we got a question. What are the probabilities of just a double bottom at 3,800 and instead of breaking down? I mean, there's always a possibility of that, but we've kind of already had a double bottom, and it was right here. That is a classic double bottom pattern right there. So this would be a triple bottom, actually right at 38 and or even 39. Oh, you were talking about 38. Okay, so yeah, this would be the first hit down here. I see what you're saying. My mistake. So yeah, that would be the first hit there, and then you're theorizing it coming down here and then kind of going up. It's definitely possible. I feel that with the rate hike coming up this week and with the less than positive CPI data numbers, I find it hard to believe that we're not going to push through 38, but there's always that possibility. The last time we came down here, there was ridiculous amounts of buying pressure, and I mean ridiculous. It was crazy. If you were watching the market this day, it was so red early on, and then the buying pressure just swarmed in. And, we see all of these, investors and, hedge funds and things like that, and people who've got a whole lot more capital to distribute than you and I really push this back up, and, kind of everybody followed suit with them as well. But, as far as, what are the probabilities, that it comes down here. I think it's definitely going to come down here and touch. The question is, does it breach below? I mean, last time we didn't actually make it all the way to 38. We made it to 38.10, close enough for for government work, as they would say. But it'll be interesting to see if we bounce off 39 or if we do continue back down to 38. My opinion, I think the writing is kind of on the wall at this point, and I kind of feel that we're going to see more downside, but that just could be my negative outlook on the market right now and how bloated I feel it is. I kind of feel like this is a necessary evil right now. It's one of those things where, loose, as they call modern monetary theory, is coming home to roost, for lack of a better term. And I think we're suffering that right now for all the years of, reckless spending and things like that. Now we're going to pay for it. We got to play earlier, and now we got to pay. So it is what it is. You have to pay the doorman eventually, and I think that may be with the market coming down. But that isn't to say that that's necessarily bad for us. That means that there will be buying opportunities aplenty in very solid companies that, given enough time, will and should recover to levels where you can start taking profits. As to the potential pattern for a double bottom, absolutely. And it should be good. Back to the question of, is it possible that we could see a double bottom? Absolutely. It is absolutely possible that we could see that. It could come back down here to, even in the mid 3,800s and bounce off there and, come back up. But the problem is we are still in an overall downtrend on the S&P 500. And, we have these little mini recoveries as, we're coming down. But the overall trend is down. So even if we don't break through 3,800 this time, I think it will happen eventually. When that is anybody's guess. But it's definitely a possibility here. We could see that. Am I gonna be buying right here at 38 and going, I'm gonna get that bounce? No, I would not. I would be very, very cautious trying to knife catch the S&P 500. Excellent question. The question is, what is the best percentage of cash to hold in order to not be completely out of the market and just kind of sitting on your hands? I totally understand where that question is coming from, because we feel like if we don't have a position open and we are not placing trades, we're not in the market. I would say right now to be at least in 60% cash. That's my opinion, and kind of where I would be looking to be right now. If I had any type of sizable account that I could leverage, I would definitely be looking to hold about 60% cash at this point and kind of see where we go. If we start to see some uptick on Monday and it looks like it's going to go green, then maybe it might be a time to maybe take some of that dip buy list, maybe to hold off. But what I will say is keep an eye on the updates and insights tab. We will let you know when we suggest that it's a good time to go ahead and deploy some of that capital. But yeah, right now I'd be holding at least 60% cash, just ready to go. And if you have some open positions that are in the red, you can continue to hold them if they're solid companies. If not, then it's one of those things where if you're holding really bad companies, it may be time to cut your losses, because right now it's one of those things where I kind of feel it's only going to get worse. But yeah, I would be holding about 60% cash right now if I were you. No, that's okay. I mean, if you have deployed capital right now, that's all right. I wouldn't recommend closing positions that are in the red just to be like, oh, well, Chris told me to get to 60% on a webinar, so I need to do that. If any amount of cash that you have right now that's free, I would hold on to it and be ready to deploy it. If you have positions in the green that you're concerned about, I would consider taking profits. If they're in the red and they're solid companies, I would not recommend closing. Just continue to hold at this point. I know that it's kind of a boring thing to do, and it's not exciting, and it's not fun, and I get that. I totally get that. I have been in your shoes, and I know where you're at with that. But it's one of those things, sometimes being in the market means we have to be careful when we decide to take our positions. And sometimes the right position is no position. And so right now our position is wait and see, hang tight. Like I said, don't close out trades right now just because you want to get more capital available. You may be taking unnecessary losses that you didn't need to take. But yeah, just overall, that would be my recommendation. But that's not to suggest it's just like, okay, dump half your portfolio to get up to that number. All right, so we got a question. I was looking at re-entering AMD sometime this week. I expect further downside, but not too far from the mid-80 support levels. Maybe half a position if we see some compression in that area. Well, let's take a look. This is a personal favorite of our, of our group here, AMD, and absolutely, definitely, we got some support down here around the 88 area. Looks like that might be older support. Yeah, that is a bit of an older support level there. But still, I agree with you. Probably in the mid-80s, you're going to see some support, especially in between these two lines here, with 74 kind of being the lower end of that. Yeah, I mean, if you want to go in, I mean, you don't necessarily have to go in half position. You could maybe go in like a third or something like that, just so you're, you have a position. AMD looked to be curling up and was kind of holding this 88 level before. It would be interesting to see if it gets back down here, but I like it. AMD, a great company, and we definitely fans of them here on at Riz International. Definitely support them. It's my processor that I have in my computer right now, so I'm very happy with their products, and they definitely put out good stuff. It may be one of those things if you're not looking to swing it real quick. It may be one of those plays that you have to hold for a little bit. I mean, I wouldn't be expecting it to run back to 150 anytime soon, especially with the semiconductor shortage in general. But they are putting out good stuff, and definitely a great company to get into. So I could definitely support you on that one, Milton. All right, well, I don't see anybody else typing at the moment, but of course I want to thank everybody for coming out. I really appreciate each and every one of you, especially our elite members. If you are watching this on YouTube on replay, please make sure you click that like and subscribe button if you haven't already, and leave a comment down below. Let me know what you think. Are you expecting more downside in the S&P 500, or do you think we're going to bounce? Do you think we're going to bounce off 39? Let me know down in the comments. And thank you everybody for coming out, and we will catch you on the next one.